Okay, Kate, are you there? Kate?
I am.
Okay.
I am.
Mr. Walton said at 7 o'clock, I'll call the meeting to order. We're going to skip the invocation and the pledge, get right into new business item number 1, and I'm going to turn the meeting over to you, sir.
All right. Every councilman, any councilwoman, I got a letter from Mayor Foreman's council out of Atlanta last week requesting that payment be made for $5,000 as a lump sum for representation that was provided due to a conflict of interest involving the Rick Ford lawsuit. There was some case law cited in that letter. Case law was not permitted. Okay? And basically what that case stands for is the city of Stockbridge, as we all know, has always been a place that was in turmoil. Back, I believe it was in the middle of 2010, 2005, 2006, the city administrator and the mayor of Stockbridge were at war. And the mayor sued the city for violating what he termed to be charter provisions. The mayor ultimately prevailed and was able to recover his attorney's fees under a Georgia statute that I don't have memorized, but there's a Georgia statute which awards attorney's fees for anybody in litigation that prevails at any time. The Court of Appeals applied that provision. The city argued that the provision did not apply to municipalities. However, the Court of Appeals said that there was precedent involving the Greene County Clerk of Court, where the Greene County Clerk of Court prevailed and was able to get her attorney's fees. I guess with all this candor, you know, the question remains is, does the dismissal of a lawsuit constitute victory? There's not case law out there that speaks to that. Okay? Here's where I kind of come down on all of this. There would be, under the Georgia Rules of Professional Conduct, the conflict of interest rule bars me from acting as an intermediary between the mayor and the rest of the city council or the city administrator. Let me give you a hypothetical that's actually happened. There was a city down in South Georgia. Bill probably went to many seminars on this, but I found this today. There was a city down in South Georgia where the city administrator was accused of sexual harassment. The city council wanted to settle that lawsuit, wanted to go ahead and say, you know what, let's just go ahead and settle that lawsuit. The city administrator and the mayor were vehemently against that. That case held that under Georgia law, that constituted a conflict of interest for the city attorney, which would mean I couldn't be in the middle of any dispute between the mayor and city council because you've got, I represent you in the corporate entity of the city. Well, the corporate entity is comprised of the mayor and council. So I guess my concern is, you know, I feel like we're going in such a positive direction with everything. Okay, things have quieted down. Temple is moving in the direction that we want to be moving. I guess the evaluation that needs to to be made by the voting council members is, you know, whether we are ready, willing, and able to withstand a legal fight, you know, with an hourly attorney somewhere because I can't get in the middle of it. That's the thing that worries me. You know, are we setting some type of precedent for, you know, paying for Mayor Harmon's legal fees? Yeah, we are. We're setting a precedent. There's no doubt about it. But in that situation, if we think about it, kind of a skyscraper view, the lawsuit that was filed against not only Mayor Harmon, but Councilman Walden, Councilwoman Rance, it was everybody, basically. You know, there were so many differing opinions about that lawsuit. And if Councilman A disagreed with Councilman B, I do think there could be a conflict of interest there that requires the city attorney to say, hey, you know what, I can't represent both of you now. I've always had a tough time when it comes to SPLOST, appropriations. I represent the city of Temple and I represent the city of Whitesburg. I'm sitting there arguing about the same SPLOST money, advocating on behalf of those cities, and you're like, okay, I don't know that this is okay. You know, and now we have another law firm in the county that is representing the county, Villa-Rica, and all kinds of other things. You know, conflicts of interest, you know, the judicial discretion lies, you know, with conflicts of interest, okay, which means the court has a broad stroke when it comes to it. And the Court of Appeals gives the Superior Court the judicial discretion to make that decision. And what that means is they very rarely overturn the decision by any Superior Court. I just don't want to see us go down a molehill fighting, spending taxpayer money, and hopefully, you know, we can figure out a way to, you know, put this all behind us and just move forward like I think we can do.
So you do something?
Is that William?
That's William.
Give William the telephone if he's going to ask a question.
Oh, I asked you where you do.
Did he ask?
He asked if you were finished talking.
Yes. Yes.
So your advice to us, where the conflict of interest involves you, is that not correct?
What now? Somebody's got to tell me.
Does the conflict of interest involve you, is what he's asking?
Did the conflict of interest involve...
Will the conflict of interest involve you?
Somebody repeat that question.
Can somebody hear you guys up there?
Reach, if not him, William, the whole phone now.
Oh,
Will the conflict of interest involve you? Is that what you're saying?
All right, the rule is this. If I believe if the intermediaries, who in this instance would be me, meaning that the mayor and the council disagree, okay? In that instance, I would have a conflict of interest, okay? Because I represent the institution mayor and council themselves, okay, as the governing authority in the temple. So if there is a disagreement, which there obviously is, where I don't think it can be resolved without active litigation, that puts me into a conflict of interest, yes. And my worry is that there, you know, there is some division within the mayor and council, and that I don't know that I feel 100% comfortable that it can be resolved without litigation. I hope it can. I hope we've come a long way. But, you know, with that said, I just worry, you know, what if, you know, that's kind of my natural anxiety. But, you know, yes, I think there could potentially be a conflict of interest if there is a division amongst this, at least in litigation.
Okay. Then you got a phone. So in other words, we're being asked, but we don't know what's what. But I think that, my thinking is this. We paid $25, we paid attorney, two attorneys, a law firm and our own attorney. Everybody up here is covered upon that insurance.
Was there a question I couldn't hear?
I mean, I'm just going over to see, I'm just talking to the council.
You're asking whether if there exists a conflict of interest when I have to back out, whether insurance would cover that council?
That's right.
William, I don't know the answer to that. You know, insurance could possibly cover it. I don't know off the top of my head. I haven't memorized that insurance policy, but it's something I can find out.
So, according to this here now, we have to cover everybody that's name was on this level, right? Your name is on there, Howard. I mean, we just have to cover everybody here that's on that level, you and who else?
I am.
Let's see.
I am. And I want to know if the taxpayers are going to pay mine pay. Is Lester asking for the taxpayers to pay his personal lawyer? Because if he is, then what's to hold it out from me or John Atkins or, well, I know McIntosh has been awarded her fees.
But the water.
Yes, McIntosh has done been awarded hers
Who?
by Rick Ford.
Carroll County Judge awarded hers.
Did they?
Yes. County judge did what?
Awarded Ms. McIntosh her attorney fees.
$1,500.
She hasn't heard that.
Well, there's some place record down there. All she's got to do is go down. She knows it. She just
Filed a
ain't told
motion for them and,
Good,
they
I'm
paid
next.
her attorney's fees.
Well, can anybody else do the same?
Sure, if,
Hey.
Is the city going after theirs?
Kay, Linda Walden.
This one, we got to do this with the council.
You got me on that agenda, Mayor. You've listed me on the agenda, so I have the right to speak.
Ms. Walden, I'm not going to speak on this, but I comment the legal, my lawyers wanted it like this.
You put me on the agenda.
This is the legal, I'm not going to get in that with you.
Kay, you there? Kay?
Okay,
It dropped off. Yeah, it dropped off.
Okay, this is Howard. I think what Mr. Simmons was trying to say, or what he was saying, was that the taxpayers have paid an insurance company to represent the elected officials. And they did represent the city and the elected officials in this lawsuit. They represented me. But, you know, the other ones, the other officials had the opportunity to go out and hire their own attorneys if they chose to do so. And apparently that's what Mr. Harmon had done. He chose not to use the insurance companies that the city provided, that the insurance provided. So where's the conflict?
The conflict there was lies between the disagreement between Mayor Harmon and any of the other council members. Okay, or it could be used if there was a disagreement about how to proceed.
And there was
disagreement on how to proceed with the rest of the city council or Mayor Harmon. There could be a conflict there.
Oh, you're talking about from now going forward. You're not talking about in the past with the lawsuit, right?
No. The conflict of interest rule has been around since God knows when. I think, I have a difficult time with any lawyer representing an institutional client where there is a disagreement within that structure. Okay, so hypothetically speaking, if there is a disgruntled employee who files or makes a harassment complaint, okay, and you saw this in the Ms. Ransom, the complaint that she made, there's a conflict there, okay, because, Ms. Ransom was asserting things that other parts of the city were disagreeing with. And, Cynthia went out, hired separate counsel to defend that. So, the city attorney represents the group as a whole, Howard. And, it's not always this difficult, I guess would be the best way to put it. I don't represent just the mayor, I don't represent just the councilmen and women, I don't represent just the city administrator. I'm supposed to represent the entire shooting match.
Okay, but during this lawsuit, the city was represented by the insurance company attorneys, not the former city attorney. So where is
She went out, yes, she engaged the insurance company attorney, that's right.
Okay, then
She can't represent them.
correct. So where's the conflict?
The conflict lies in the disagreement between Mayor Harmon's wishes and how the insurance company through Ms. Davis is going to handle the situation.
Okay, well, that's not a conflict with council, correct?
That's not a conflict of what else?
That's not a conflict between the mayor and the council.
The insurance attorney was representing the council.
Okay, but you mentioned a few minutes ago about if there could be a conflict between if there's a conflict between the mayor and the council. There was no conflict during that lawsuit.
No, there would be a conflict.
Okay, but it didn't happen. So what's the problem with the conflict? You're talking about from now going forward?
What do you think was right? You're losing.
Okay.
There was a conflict between Mayor Harmon's wishes and the councilman's wishes, the lawyer.
You're talking about the insurance lawyers.
Yes, they were an extension of, yes, the insurance policy. They were hired to represent the mayor and council.
Correct. Which they did.
Yes, Mayor Harmon's wish to not be defended in the manner that the insurance company lawyers wish to defend the matter. So that kind of put him outside the circle. Which I think would be the conflict of interest, whereby the insurance lawyer could go and say, Mayor Foreman wants this case dismissed and wants $1 billion. So the other four councilmen, men and women, just want the case dismissed. You represent everybody on the same playing field. You were all the same person.
Right. I had the insurance lawyer's representation, and then of course, the lawsuit was dismissed, it was dropped. So that was the end of it.
No, somebody had to go with it.
Okay. I've got my questions answered.
Who represents the insurance lawyer representative?
Yes. They represent the city and the elected officials.
Who goes after those legal fees? Why should we pay them?
I see 3 elected officials.
Any questions for me? Any questions for me up in here?
I don't think so. Kate, are you running this portion of the meeting?
I'm done.
Okay, who's running the meeting? The mayor said you are.
No, the mayor's looking
Somebody has to call for a motion. Otherwise, we're just sitting here quiet.
Sounds like it.
Mr. Attorney, I turn this portion of the meeting over for you. You can call for the motion.
I can't call for a motion. Does anybody have a motion? I can't make a motion.
I know, can't make the motion.
Hey, you still there?
I am, it's either a yay or a nay.
Well, we need to move on.
I mean, it's either a yay or a nay, isn't it?
There's no motion. You gotta have a motion in a second.
Well, you like to make a motion for the table? Have to be a motion to some point, we're wrong.
No, there doesn't have to be a motion, it can die.
No motion. Any motion? None. Failed none. All right, move on.
Okay, we will, thank you, that will constitute a no vote, so we will move on to the second item on the agenda. Presentation by the CPA firm of Warren Neighbors LLC, the fiscal year 2015 audit report for the city of Temple.
Thank you for allowing us to be with you
Thank you for coming.
tonight. It seems like it hadn't been that long since we've been here. The good news is we're caught up now, man.
All right.
This is it. You caught up. When you submit by the end of this month, you'll get the state happy. They'll stop sending us these letters asking us what that report is. Things like that. So that's a good thing. We're going to talk about some financial statements tonight, and we have one new, it's funny what makes excitement for an audit. A new accounting standard seems to make life difficult sometimes for accountants, but you guys implemented a new accounting standard this year related to pensions, so we're going to talk about that a little bit tonight. But what you have in front of you now are a couple of documents. I'm going to talk to you about the financial statements, and Robin is going to jump in when I step in something I'm not supposed to. And then she's going to follow up and talk about some of these letters that are not in the clip. So if we can look at what you got in the clip, this is in draft form. We're waiting on two critical documents before we can issue these. First is the representation letter, which obviously you guys couldn't sign until after tonight, and then the attorney letter, which once again that had to happen after tonight as well. So, but we are in draft form. So if you have wording changes or anything that you see that jumps out at you that you want to change, we're still there. If you look on page 1 in here, this is the independent auditor's report. This is really, these 3 pages are ours. The pages after these 3 pages are the city's. So this is the independent auditor's report on your financial statements. Auditor's responsibility, if you look in the 3rd paragraph, basically the last sentence, we're required to plan and perform the audit to obtain reasonable assurance about whether financial statements are free of material misstatement. We'll talk about this every year. Obviously, we did not come in and look at every single transaction that took place year to year. We looked at a good bit of them, and we looked at the large ones, and we thought of the ones that we thought were of a risky nature from our risk assessments. But do keep in mind that we did not look at every single transaction during the year. We would never get finished with an audit if we did that. If you look over on the next page, the opinion paragraph is at the top of the page. And this is where we say the financial statements referred to above present fairly in all material respects the financial position of the city. So that's a good thing. If you saw something that said other than we believe that it presents fairly in all material respects, that would mean that we found something that caused us, say, to doubt your ability to continue as a going concern, or we found fraud or mismanagement or something in there that would be disclosed in this particular section. But it's not, you like to see one paragraph in that opinion section. The emphasis of the matter, this is the new standard that I was talking about. When you read through the notes to the financial statements, you will notice that you did adopt what's called GASB Statement Number 68 this year. Actually, you adopted 68 and 71, but basically 71 corrects some errors that happened in 68. But GASB 68 essentially requires you as a government to now record the total net pension liability. In other words, the unfunded accrued liability on the statement on your balance sheet, in a sense. So if you think about a similar public corporation or anyone else who has a defined benefit pension plan, they had to record these liabilities years and years ago. Now the governments have to record this unfunded accrued liability on your books. And then other parts of the GASB statement talks about the discount rate that you have to use to record that, and there's some other really exciting things that auditors like and accountants like. But really what you need to know here is that this is the year of implementation for GASB 68, and we will see the impact of that on your financial
What
statement.
page are you on?
Yep. Well, this is just my notes on what GASB 68. I'm still back on page 1. Now I'm going to jump around a bit, and just if you can follow. My favorite statement in here is on page 12. If you can look on page 12, this is your P&L, or your statement of activities. If you're in the business world, you might consider this your P&L. What this does, it's kind of funny from in a government situation. You kind of start at the top and show that all of the expenses first, and then you show how you covered those expenses further down the page. So if you look across the page and you see, and for your governmental activities, those are your general government, your public safety, your public works, your agricultural. You see the total expenses. And then the next column shows the charges for services. So if you're in the business world, your earned revenue, if you will. And then you see operating grants and other contributions, capital grants. And then in the last couple of columns, you see the amounts. They all of a sudden get it to be in brackets. Those are the amounts that you have to cover with some kind of tax revenue or other kind of revenue like that. So you can see, for example, your governmental activities, you were at a deficit of $1.6 million before you consider any taxes. So if you go on down that column, you'll notice that your total general revenues were that $2,140,000 number. Those are your general revenues used to offset those general essentially that general deficit up above. And then you had some transfers in from your enterprise funds, essentially for services that you provided for the enterprise funds. And so your total revenues there, $2.3 million. You had an overall change in net position for governmental activities of $692,000. Pretty good this year. So that's always a good thing to hear, that your overall revenues met your needs. So you see that, and then you see that 2 lines down from there, the effect of the adoption of GASB 68. This is a one-time charge, essentially, through this P&L, if you will. Next year, you'll just record the change, and it'll just flow up into one of the other expense categories up above. But for the year of implementation, we break that down below so you can clearly see that to implement GASB 68 was about $130,000 for you guys. Not really, that's a very small amount compared to some cities and other municipalities around. But that essentially gets the liability on the books for that accrued liability that you would owe for past service that, and for any for service for any retired folks that are already being paid out. So that gets the total liability on your book. So that gets you down to a net position at the end of the year in the governmental activities of $8 million. Your enterprise fund, that's your water and sewer, of $3.7 million. So you can really, on this statement, the reason I like it, you can see how it flows. You can see up at the top for the government, for the business type activities, you can see your water and sewer expenses from $253,000 this year, and then down below you can see how you recovered some of that. And so you had a net deficit there of $415,000. And we have another schedule in here that shows kind of more detail about the enterprise funds. But essentially, it's funny, in an enterprise fund deals with water, the amount of water people use impacts the amount of revenue that you have and the expenses that go out. So you're going to have some fluctuation there. But you do keep in mind that at the end of the day, $3.7 million is your net position in that particular enterprise fund. All right, so that's the schedule that I always like to talk about because, and then now look at page 16. This is the separate balance sheet, if you will, for the water and sewer fund. I just don't want you guys to think that, oh no, we had a little bit of a deficit this year in the water and sewer fund, so that's a big issue. I don't want you to think that. This is your balance sheet for your water and sewer enterprise fund. And you will notice down at the bottom, in your equity section or in your net position section, down at the bottom, your unrestricted net position of $687,000, which is that's a positive 687. That represents about 50% of your annual expenditures in that fund. So I'll leave that up to you as to whether you think that's a large enough cushion or what. But you know that's kind of where you are from a balance sheet perspective in that water and sewer fund. The next page is your P&L for that fund as it stands alone. So you can see about halfway down the page, you see something that says your operating income for the year was positive, $39,855. That's good. Then you start adding these non-operating items, interest revenue, interest expense, the transfers out to the general fund, pay for services that they provide. And then you can see that your overall net position changed with the deficit of $415. So that's kind of how this all flows together. We have governmental funds, and we have just different kinds of presentations in here. And another page that I really like is if you look at page 7. For somebody who works not just in the governmental arena, but also in the nonprofit and arena, I'd like to see where are we compared to last year. A lot of governmental statements just show you the current year activity. If you look at page 7, though, you can see the comparison year over year. So for the governmental activities, up at the top, you can see how cash fluctuated. First column is the 2015, second column 14. And then your business type, that's your enterprise funds again. So you can see your total assets and your general activities increased this year. You'd like to see that. You can see that your business type activities fluctuated downward, but we've already talked about why that might occur. Down at the bottom of the page, you can see your overall net position and how it fluctuated year over year. You do have a big piece of your net position that is comprised of capital assets, and you can see that piece went up this year in the governmental arena, and you do have a footnote in the financials that details out what caused that increase, and then you can see your restricted, your SPLOST type funds funds went down, but that's okay to see that going down. That means, okay, you're doing with it what you're supposed to do with that response money. So that is a very, very broad brush of the balance sheet. Now, if you look at page 8, this is a very, very broad brush of your P&L for the city overall. You can see once again, maybe this is kind of what you're used to seeing with the P&L, with the revenue up top and the expenses down below. But what I like about this presentation, it shows you a year-to-year comparison. For example, you can see in the governmental activities that your total revenue went from $3.1 million in 14 to $3.3 million in 15. And you can see how your total expenses actually went the other way. We went from $2.9 million down to $2.7 million. So I guess this was not a bad year. If you got to adopt GASB 68, this is a good year to do it because you had revenues going up and expenses going down. You can see down at the bottom of the page your overall change in position for governmental activities. Last year it was 178 positive. This year it's 292. I'm sorry, 692 positive. So if you compare year over year governmental activities, you were well within expectations. And more importantly, when you flip over in the back and you look at the budget actual comparisons, you operated within the budget as well. Always a good thing to be able to tell. Council members, board members. So, you know, there is a lot of other information in here. Those are kind of the highlights of it. Robin, what did I miss? So you guys, if you have specific questions about something maybe that you discussed during the year at council meetings, that, okay, well, how did that end up being reflected in the financial results? Where are we in a certain area? We will attempt to address those items. I mean, you have a footnote back here for just about everything. If you're interested in receivables, you've got a footnote on that. And we'll talk about some of these, really some of these detail items and some of the comments that we have related to internal controls that we want to talk about in just a few minutes.
Overall, how did we do on our enterprise fund? Because we had problems with revenue and the debt service and all that. So overall, how are we doing that?
Overall, you had it was a break-even year from operations. You know, you'd like that to be a little bit better than break-even, quite frankly, but your non-operating activities, what you're talking about, your interest expense, you had an overall change in position. If you want to, on page 17 is your P&L for your water and sewer enterprise fund. It was a deficit of $415,000 this year.
And what now?
A deficit of $415,000.
In what area?
In the water and sewer enterprise.
Part of that depreciation is their depreciation.
Absolutely.
Pretty much $350,000. Okay, so that reflects that 415 is 351 in just depreciation.
And there's a 293 of interest. So a lot of people like to know how much was depreciation, how much was interest.
So that 415 is not as bad as what.
If you think about it on a cash basis, you're exactly right. In fact, that is a very good point. If you look at page 18, this is your cash flow statement from the enterprise fund.
You said 415. On
Yeah.
page 18.
On page 17.
Oh, 17.
17. You see about the fifth number up from the bottom. Overall change in position of the year. Deficit of $415,000. Mr. Walden pointed out that of piece of that is depreciation, a non-cash item.
Yeah, but it's not actual money.
Until you spend it, yeah, exactly. I mean, you can see on page 18, the statement of cash flows that shows, and I guess the easiest number to see is the $490,000. This is the cash that was provided this year by operating activities. At the top, receipts from customers, 1.5, payments, cash basis, payments to suppliers, cash basis, payments to employees. So you had a positive cash of $490,000 from operations. And then the rest of the statement just shows how you use that $490,000. You'll notice that you used cash and capital and related financing $789,000. So you spent more in cash than you earned, I guess, from operations.
Is there anything here that shows our actual bond compliance for the sewer bond?
The bond compliance is not part of the audited financial statements. There is in our work papers, we have the calculation that was done as of year end, and then we have our finalized version that's as of year end. That is not part of these
Do
statements.
you remember what it was, the percentage?
I do not.
But we can get that for you. If you want to see the detail of the debt, that's on page, we have put that on page 30 in here, the cost. Page 30. Water and sewer, 2010 revenue bonds. And you can see the loss that you're talking about there. A big piece of which was actually deferred on the balance sheet. So you're not getting the total impact of it. It'll get spread over a couple of years.
I will interject in addition to that, one of the questions that came up during our last presentation was about the date of the balloon. And the date for that is January 1 of 2021.
Well, what date is that now?
January 1st of 2021 for the balloon payment on the debt.
That's the $4.6 million.
I want to say it was 4.1, but I'd have to confirm that.
Actually, you can see it on the bottom of page 30. Yep. There's your 4.6. So that, yeah, I mean, essentially, and that includes accrued interest as well, I guess. So you got a little bit of time to think about that.
Yeah, we're gonna start working on that.
That's one thing we need to discuss, since we are getting up against the top fees and things like that. That's what we need to discuss on how we gonna deal with that money.
I mean, if you have a much larger pension plan note this year, quite frankly, it started on page 31. It really goes through all the different calculations that we use to come up with that net pension liability. But essentially, you can see in the middle of page 34 your net pension liability calculation there. Your total pension liability is $654,000. Obviously, you don't have to pay all that at once. That's spread out. That's for everybody who's retired in the past and everybody who's currently employed and retired. That's what I really wanted to go over with you. Once again, it was an unmodified audit opinion. You always like to hear that. We don't have any compliance issues with that to report to. We don't have any compliance issues in any of the items on the balance sheet and income statement. Now, what Robin is getting ready to talk to you about is some things that are, if they're not corrected, will become compliance type issues for
May I ask a question before we go to Rob?
Yes.
I want to go back to 30.
Okay.
Now, this 2020, right over this, from that, we got $4,475. Is that a lump sum we gonna have to pay
Or refinance.
or refund?
But when it becomes due, the balloon becomes due. Actually, I think it's January of 2021, right?
But now, we can depend on that principal in the meantime, before we get to that balloon.
You're gonna be paying $390, the numbers upstream are the amount that you're paying each year. So you're paying a total of $622,000 each year. That total policy.
Yeah, I see that.
So that's the amount that you're paying. So what happens is at the end of the day, at the end of the year 2019, what's left to be paid is that 4.4, the principal. But you've got some interest that's been accrued also that you'll have to. In other words, you haven't been paying
All the interest and principal that we should.
but it will be rolled into that balloon whenever you guys refinance. Or when the bonds, when the bonds mature. Maybe you'll have $4.6 million cash laying around. There has to be some big tap fees, that's all right. Absolutely. So that's your financials. 38. Before I turn it over to Robin, because I know she's going to take the floor when I turn it over. Page 38. This is your budgetary comparison. And you can see here, you had an original budget, then you had your adjusted budget, and you compare that to the actual amounts. And you can see that under your final budget, you were projecting that you might have a little bit of deficit. Well, really, you came in at a surplus for the year. So that's a good thing. That's a good thing to know. That's the budget to actual difference, and then you got your variance to the far side over there. So on the expense side, you were slightly over what you projected, but on the revenue side, you brought in more revenue than you had projected. So that's good.
So how much is the surplus where?
So the excess deficiency of revenues over expenditures is that very far column, positive $499,000 area.
Okay, so that was our surplus for the year.
Well, no. That's the amount that you revenue over the expenses. That's over what you projected to be. So yes. I got you. Yeah. So, all right.
So you have two other letters outside of the one that's clipped together. If you start with the one that the paragraph begins, we have audited the financial statements.
Right, let's keep going.
This is our standard letter, just like you saw last year, updated for the current year in regards to any significant audit findings, which there were none. Maybe indicate that here. If we encountered any difficulties, if there were misstatements that went uncorrected, if we had any disagreements with management, and then it says management representations, says we've requested certain management representations. That's that letter that we're going to be getting after today that basically provides that to us. It talks about management with consultations with other independent accountants, which in this case we have not had to have. Other audit findings or issues, there was nothing noted there. Other matters, here we talk about your required supplementary information outside of the basic financial statements. And that schedule we were just looking at, that budget comparison is an example of that. And then this talks also about the restricted use of the financials being for both the council and for the management of the city. So that's a very basic standard letter as it applies to you all. The more significant letter is going to be the other one that begins in planning and performing our audit. If you go down to the third paragraph, the very last couple of sentences, it says, begins with a material weakness is a deficiency or combination of deficiencies in internal control, that a material misstatement will not be prevented, detected, or corrected on a timely basis. So we have one of those. We actually had two of those in the prior year. We have one that remains for the current year. So I'm going to flip around just a little bit. If you'll go to the next page, the item that we consider to still be a material weakness is in your utility billing area. We talked about this pretty in depth when we were here last. It goes into the structure of how billing takes place, the process that happens when payments are received, any adjustments are made to accounts, and the ability to go behind to track any of those changes, to see approvals from management if there were write-offs, things of that nature. Those are all outlined here. Nothing has changed in that regard since the last audit. I will say this does not reflect your management response. You are in the process, as you all, I'm sure, are very well aware, of transitioning that over. So I fully anticipate or hope that this is going to go away moving forward. But this is essentially the same thing that we encountered for the 2014 audit. If you flip back to the previous page again, we'll talk about a significant deficiency. A significant deficiency or combination of deficiencies in internal control that is less severe than a material weakness, but still important enough to merit attention to it. So if you'll go to Exhibit 2, we have 3 of those provided for you here. 2015-002, controls over amounts reported in the financial statements. This essentially just has to do with journal entries and adjustments that needed to be made to the financial statements to bring them to the point that they are now. Sarah and Mr. Osborne have provided a response in regards to that with turnover and lack of oversight and things of that nature, and how that will be dealt with moving forward. Of course, an intergovernmental agreement in having an intricate involvement in that. 003, bank reconciliations. Again, once, we're in 2014, for 2014, we're still catching up into 15, into early 16, and so then now we're catching up 15 into 16 as well. So we encountered essentially the same thing, not quite as bad, obviously, but we encountered the same. Again, with that intergovernmental agreement, I believe that will start to be handled. For 004, limitations of the current accounting system. Again, same as the prior year. This has to do with your TBS, your accounting software, and their ability to get reports, to eliminate the potential for duplicate invoices to be entered as potentially paid, the utility billing component of it, all of those pieces that will inherently be dealt with that intergovernmental agreement and change over. So I suspect that when we're back and presenting 2016, that maybe by the time that we get that finished, that hopefully these items will be eliminated. That's the anticipation.
So before we move past material weaknesses and significant deficiencies, keep in mind material weakness, you don't like to see those repeat year after year after year. But because of the tight time frame between the last audit and this one, it's not surprising the one on utility buildings came back around. But I think we did drop one off, didn't we? That was a material weakness from the prior audit.
You did.
Yeah. Yeah. So you had two. Now you're down to one. So we're going to knock them down one at a time. And then bank records. Some of these significant deficiencies, though, keep in mind if they're not addressed, they will end up bouncing up to material weaknesses if you're not careful. Like you got to do bank reconciliations timely, guys. Whether it's at home, whether it's at work, whether it's at the city. You know, you got to do that timely. You've got to make sure your financial. We had several adjustments this year in the financial statement. You say, well, so what? That's why you do an audit. Well, what happens? What that tells you is it could be that the information that you received throughout the year as financial information might not have been accurate. If we came in at the end of the year and had big adjustments, that means that maybe that the information that you were receiving all along needs to be adjusted as well. So that's why that's significant to us, and that's why we want to get that fixed. And we think if you fix the current accounting system and software, you get that fixed, it's going to fix that top one at the same time. So
It's all going to be resolved this year.
yeah, I mean that's certainly the plan. Now it's all downhill from here. These next ones that Robin is going to talk to you about, these are control items, control issues, but they don't come up to that level of thing. These are things that that we think you need to be aware of and that need to be fixed, but they are not to the same level as a significant deficiency or a material weakness.
So if you'll go to Exhibit 3, the first item notated there is accounts receivable in regards to utility billing. When you pull an accounts receivable report out of the current software, it shows excessive amounts of old balances there that either need to be written off or completely reserved, meaning that we've made a bad debt allowance and that we don't anticipate receiving those. I know that throughout the year that there's been some efforts made to start that process, but as of the end of the year, that had not been completed yet. So that is an area that we've made some recommendations on moving forward with. With regards to the bond compliance, this is just a periodic monitoring rather than just when the bond compliance document is to be submitted, but periodically testing, doing that calculation to see where you are at throughout the year so that there are no surprises when that becomes due. And then that can help you also make decisions about how you're going to operate that water and sewer fund and make decisions with regards to fees and things of that nature. And like I mentioned, the January 1st, 2021 monthly balloon payment, the improvements there. The 2015-07 licensing database. We talked about this last year as well. This one hasn't gone away. This is for your business licenses and things like that. You have a separate software that you use to maintain that information, but it is not reconciled to TVS. That remains the same case for the year ended December 31st, 2015. And that just allows you to strengthen your controls. That way you know that everything that's been reported in one system is reported in another system. And that you see that those balance between one another. I know that those are elected fees. Those aren't expected fees. So that's something to consider when you're maintaining those. But it's just not being monitored and compared to the accounting records at this point in time. 2015-008 journal entry approval. This is another that we discussed in 2014, and that has to do with both recurring and non-recurring journal entries, meaning on a monthly basis you have things that normally happen, such as depreciation would be a good example of something that happens monthly. That would be your recurring journal entry that could be set up in advance and not need any oversight once that's been set up. The others would be the one-off situations that occur from month to month that need to be recorded in the books that are not your typical, they can't be anticipated or estimated, that would require oversight from someone other than the person that's entering that. And right now, currently, that is Sarah that is making those journal entries. So some form of oversight on what those journal entries will be with documented approval of those. For 2015-009, documentation, internal controls, and accounting policies. This is an overall statement in regards to written documentation and policies and procedures about how to handle things related to internal controls, such as segregation of duties would be a prime example of something that would be indicated there. But to have that document so that if a question was to arise or you have staff that begin cross-training so that you've got coverage for segregation of duties, that expectation is plainly written out and everyone is on the same page about what those policies and procedures will be. I think that there are some here and there, but they've not been formalized into any type of any document. For 2015-010 capital assets, this is an improved control from the prior year. In the prior year, we had some missing documentation that we weren't able to locate with regards to your capital assets, and that was a problem for us last year. In the current year, we just have some recommendations about capitalizing things as they are acquired, rather than currently we're waiting until the end of the year and doing a sweep of Sarah is doing a sweep of the accounts to see what needs to be capitalized and capitalizing it then. But for accuracy of your financial statements on a monthly basis, if you were to capitalize them when they're purchased, then your depreciation can continue to stay as accurate as possible throughout the year as well. For the following page, human resources and payroll, this remains exactly the same as the prior year. This has to do with personnel records, and it is my understanding there are some procedures that are already beginning to be implemented in regards to what is kept in the file. I will say that as part of our GASB 68 implementation, we did what we call census testing, which is basically looking at an employee file and confirming that that information actually matches what is submitted to the actuary for them to make these calculations. And while nothing significant came from that, there was some lack of documentation to be able to support those payroll numbers that were being submitted to the actuary. So while this remains the same, it actually is even more important to know that your actuarial information is correct and we're reporting your GASB 68 information in the financial statements. And there's recommendations there on what to include. And some of this is scattered in some files, so some will have it, some will not, some have none of it whatsoever. But just standardizing what is in those employee files will help take care of this.
You know, it's funny as technology kicks in around this kind of area. In years past, you'd go in and you'd say, let me see your personnel files, and it would be a file cabinet. You'd have a file for each person. Well, now we're seeing more and more where that's becoming electronic. And you say, well, let me see your file, and it's an electronic file. A lot of times those are easier to keep up. But still, you have to go through the process of keeping it up. And I think the issue here is you don't have that formal documented process of at a certain point in the year we're going to go in and we're going to update everybody's payroll and human resource file.
Risk assessment. This is a new comment this year. Throughout the course of the audit and review of the board minutes and things of that nature, or not board minutes, council minutes, notice that there's not a lot of or any discussion really about fraud risks and where there is potential for fraud to occur. Now I know that we're coming off of, in 14 we had just come off of the forensic audit and things of of that nature. So fraud was certainly on your mind, but you don't want to put it outside out of mind. It's something that needs to be considered on a regular basis, especially as your systems are now changing. So while we know where the weaknesses were in our old systems, where are the weaknesses in the new systems that are being implemented, and what can we do internally to try to mitigate those risks and things of that nature. I feel that that's an important part of the process, is that you're at least considering what risks are there and have a plan in place for dealing with what you identify those risks might be. And if and when that's done, sharing that with us is also beneficial in the audit process. We can look closer at things for you. You can share information that we discover in the audit that might not necessarily be pertinent, but would be important to you all as a council in that risk assessment process.
Typically, the way that risk assessment works, management would go through all areas of the operation and say, well, where's our progress? And you and I know typically progress comes into play anytime money is changing hands. And you want to make sure that anytime money changes hands that you've got two people involved in it. Obviously, it's harder to commit fraud if you've got two people involved. If you don't have fraud, then you have, you've got collusion on top of it. You have to have collusion if there's two people involved. Management sits around and brainstorms, where's our progress? And that changes year in and year out. As technology changes, as the services that you provide change. And then after management makes that discussion among themselves, they bring that to the board. Okay, here are the areas that we came up with as a council. Council, this is what we came up with as our progress. Do you have any other areas that we need to be working at? You guys can brainstorm with them. And then hopefully, you're never going to catch every single progress, but this is a great way to keep it on the front of everybody's mind. Talking about it every year. Hopefully somebody's going to bring it up.
On the following page, formal conflict of interest in related party policies. This just has to do with the council as well as management and other key employees and what conflicts of interest there might be. There might not be any, and that's perfectly okay, but to have that documented in some fashion. Oftentimes we'll see our board at the beginning of a new year, we'll sign a new conflict of interest and a related party type policy saying, identifying what businesses that they might be doing business with that would create a conflict of interest or a related party transaction, or essentially the effect that there is no potential for conflict of interest or related party, but to institute a policy and then follow through with that policy for not only the council but management and the employees as well. And then the final piece would be the policy to prohibit loans, and that just has to do with loans to employees and governing body members. Just a written policy saying that that's something that you do not allow.
This is one of those comments that you have other comments that get burned. You kind of bring that to the attention of your other clients. If you've got that policy in place, it's very easy to point an employee or council member to that policy and say, look, we've got this policy, we can't come along with it. I'm sorry. We don't know. Right. But you don't have written, it should be a given. But if you got it as part of your written policies, then I don't know. Where that comes into play is say you go out and you hire somebody and they can't afford the moving costs, so you pay the moving costs to come here to work for you. That would be an example of an employee loan. But if you talk to that person and say, look, we just don't have that policy. And you can point them to that policy, then it just makes it easier to say no to somebody. Now, what you've heard from us tonight are a lot of recommendations. The overarching recommendation would be to think think about your policies that you have, whether they're written or whether they're just verbal, common sense policies. Let's figure out how to get those into some kind of written form of a policy manual that gets approved by the council. And that way it's a lot easier to enforce. If you've got a formal conflict of interest in related party policy, for example, it's a lot easier to enforce. We can't deal with this particular company because that would be a conflict of interest. Now, sometimes that's just obvious, but literally we've sat in council meetings where they ask everybody around the table, do you have any conflicts? And every meeting they go around and we don't have any conflicts of interest that we know of. So, I guess after the discussion that we heard with the legal counsel, conflicts are everywhere if you're not careful. So those, we've given you a couple of recommendations, and some of the recommendations that we made last year, you guys have resolved and they're gone. And we fully believe that when we're here next year, as Robin said, probably half of these items have already been addressed in what you're already doing. Remember, you don't have the benefit of us being here a year after the last time we were here. This cycle will get you back on the annual cycle will be over. Are there any questions?
You don't have any questions? This is just a draft, you get these back, correct?
If that would be okay, that would be good, and then within the next couple of days, you'll have files. But really, we need to get that uploaded back and returned all this stuff.
We need on item number 3 to adopt a resolution to acknowledge and accept receipt for 2015 audit for the city of Temple.
Motion to adopt the resolution.
Got a motion by Mr. Wall to adopt the resolution, and a second by Mr. Simmons. Any discussion? All in favor signify by saying aye.
Aye.
Any opposed? None opposed. So that's all in favor. So will y'all be emailing this tomorrow to the state audit?
As soon as we receive the representation letter from management and the legal representation letter from Mr. Perry.
See, we
You'll have it tomorrow.
Okay, Katie says you will have it tomorrow. We have got to have this sent to the state audit.
Yeah.
We thought he was gone. We thought Kate was gone.
No, he's still here.
He's still in.
Okay, well, thank y'all, and we will get back with you. Okay, we adopted the resolution. Number 4, approve the purchase of what is that? Executed ticker. Executive Tech standard DB server and related Microsoft software equipment from Executive Tech at a cost of $4,802.90, which must be paid before the consale application can be installed by the City of Temple. Mr. Attorney, okay.
Yes.
I think if we check on the 2008 SPLOST, there was something in there for computer upgrades. And as of June the 30th, there was $9,407 in that account. Could we not take the money out of the 08 SPLOST and buy this server and say that computer upgrade is complete?
Here's it.
Okay, got a deal to use that, so do I hear a motion?
All motion.
Got a motion by Mr. Simmons, you're a second. Second by Mr. Walden, any discussion? All in favor, signify by saying aye.
Aye.
Okay, hear a motion to adjourn?
Motion to adjourn.
Got a motion, Mr. Walden?
I'll second.
Second, Mr. Simmons, all in favor, signify by saying aye.
Aye.
Okay, we adjourn, Mr. Attorney. You have a good evening, sir.